Hey, everybody. We're super excited to be here.
Yes, hello, hello. So we are hoping to take you through the steps of buying a home, and this is really kind of geared specifically towards first-time home buyers. So some of it, if you've already bought several homes, it might be you know, more on the basic side. But we really absolutely love working with first-time home buyers and walking them through the process and helping you understand what all of the steps are and what happens and then what happens next. And so that's what we'd like to spend some time talking about today. And we've got a little slideshow pulled up here, and we're going to kind of take you through it. We do want this to be interactive, so if you have any questions about anything, please feel free to post your comments, and we will do our best to answer and get you that information. We look forward to hearing from you and working with you and helping you buy your first home.
I will also say that you make sure that you private message us either a Facebook message, a text message, an email. We do have a buyer's guide to go with this, so all the content that we're going over, we can email over a guide to make it pretty easy. And if you know anybody else that's just curious about purchasing a home, this is a great tool for them. So make sure if you didn't register for the event that you go ahead and send us a message with your email address. We'll get this over to you as quickly as possible. So let's go ahead and get started.
Okay, sounds good. So I think if you're watching here today, hopefully you probably already have a pretty good thought that you think it's beneficial to own a home. But I just wanted to touch on a couple of key points here that maybe you haven't thought of. First of all, we believe that buying a home is a fantastic investment into your future. If we could look at the next slide really quick, I just want to show you from a financial standpoint. When you own a home at the age of 65, this is a chart that would show you the average net worth of someone who owns a home older than 65 versus someone who is renting under 65. So you can see there that someone who owns a home is more likely to have a significantly higher average net worth. And of course, a lot of that is in the home, but a lot of it isn't in the home because sometimes people buy homes, they build wealth through their home, and then they sell that, and sometimes they take that wealth to diversify their investments, buy other rental properties, buy different things. There's so much you can do as you start building wealth inside your home. So, great way to build wealth and that. But, besides the wealth building, if we could go back to the previous slide, there's some other really key benefits as well. First of all, mortgage rates right now are insanely low. We've really never seen, a time in history where rates are so low. Average mortgage rates on a 30-year fixed mortgage right now are in the low threes. Some people are going to be higher, some people are going to be lower. It really there's a lot of factors that impact your rate, such as your credit score and your debt to income ratio and what area you're buying in, and a number of other factors. So I don't want to get into the weeds of that, but just to give you an idea, the median home price here in Phoenix is about $300,000. If you buy a $300,000 house with a 3.25% mortgage on a 30-year fixed, your principal and interest payment on that is only, I wrote it down here, $1,044 a month. You definitely cannot rent a home for anywhere near that cheap. Now, there's some other pieces of the payment that you have to pay, the taxes and insurance and HOA, and those vary way too dramatically from house to house for me to give you an example. But usually a lot less than what you might be able to rent a home for. But then, also I think there's a lot of stability in owning a home. When you rent, and we've seen this happen, unfortunately, to a lot of, people that when you rent, the owner of that home could decide to sell it at any point, right? That your lease has to be honored. But let's say you've been in a home and you're coming up on your 1-year lease and you want to stay, but the owner has said, you know what, no, I'm selling it. You don't really have any rights at that point. If once the landlord says, hey, your lease is up and we want you out, you have to move. So it's not giving you a great deal of stability for your family. Also, if you fall onto hard financial times, let's say that you do hit a period where you're struggling making your payment, it's a pretty safe bet that a landlord, maybe not right now with all of the COVID-19 stuff, but in a normal market, if you miss your rent payment, they're likely going to begin the eviction process really quickly. But on a mortgage, if you're not able to make your mortgage payment, they're not going to begin foreclosing on the home, usually for at least 3 months, and that they won't even send the notice of default to begin the foreclosure proceedings. But so you've got a 6-month buffer, usually, at least, sometimes a lot longer if you're working with the bank and trying to negotiate a loan modification and hardships and different things like that. So you're actually a lot more stable in a home that you own when you fall onto hard financial times.
Yeah. And just goes to show, like, I think we've got a slide coming up here. We talked about stability, Merrill, but something that people don't realize is just how much rental prices go up every year. And that's just not the case when you have a mortgage.
Yeah, in 2019, the average rent price in Phoenix increased by more than $100 a month. Okay, so if you renting a home, and then you had to rent a new home a year later in Phoenix, the exact same home, on average, the price of that went up by $100. And if you owned a home, the price of that stayed the same in just 1 year. So you buy a house now and you lock in your monthly payment and it's $1,500 a month. Well, if you're renting next year, that house is going to go up to $1,600 a month. And the year after that, it might go up to $1,700 a month. But when you own a home, it's just going to usually stay pretty set at $1,500. The only slight fluctuation might be your taxes and insurance, but they're certainly not going to fluctuate as much as rent. But another thing is, it's sort of like rental prices on average never go down. As
Yeah.
everyone knows this, right? House prices can fall. Average sales prices can dip. But usually what causes that is if there's suddenly a big spike in foreclosures and short sales and things like that that drive the price, that can drive prices down, right? Well, when that happens, all those people who used to own their home, they now have to go rent, right? So that actually puts more pressure on the rental market, which can cause rental prices to go up even more. So it's almost, a housing crisis actually helps the rental market. And then when housing prices is doing good, that helps the rental market too. I mean, it's almost like nothing causes rental prices to go down. Historically speaking, rental prices almost never fall.
Yeah, and you brought up that point, because something that I hear a lot of times, Merrill, from people that are considering purchasing a home, is they say, well, I like renting in that I don't have to worry about ACs, I don't have to worry about water heaters and things like that. But you made the point that the average, what was the number that you gave at the beginning with how much it costs to own a property versus rent that property?
Well, I was showing the chart that we showed previously was a graph that was showing the average net worth of someone who owns a home versus renting a home. And yeah, owning a home, you could run into some maintenance items, but when you're renting, you're paying for the maintenance items too. You're just not paying for it all at once. And we can talk about some solutions such as home warranties and things like that can help you from having to suddenly, I've got to replace this $5,000 air conditioner. There's some good solutions to that if you don't want to get hit with a big bill all at once. But when you're renting, you're paying for those repairs too. It's built into your rent.
Yeah, it's just a different way.
Yeah. So, hiring a real estate agent, of course, is really important, and not, we're in our biased opinion, of course, but we feel that it is really, really essential to work with a real estate agent when buying a home. The contract that we use is quite complex. The purchase contract itself is 10 pages long, but then you've got a 3-page HOA addendum, usually in most cases, and then a whole bunch of other disclosure documents. And usually when we have a client who's getting ready to make an offer, we're dealing with a package of documents that's 20 to 30 pages long. And there's a lot of moving parts. And, we really pride ourselves in just trying to take it one step at a time and helping you understand, what your rights are and what all of this means. And just kind of helping you understand what it is that you're agreeing to. And, oftentimes we have seen people who were trying to do it on their own and they didn't realize, what it was that they had agreed to or were agreeing to, and what the consequences of doing that were. So, so we think.
Yeah, I was just going to say, Merrill, I think that's the biggest part, which is point number 2, is we are an advocate for the buyer. When you go into, a transaction like this, when purchasing a home, the seller's agent's going to be working on behalf of the seller. When you have a buyer's agent or you have an agent that's helping you, that person is your advocate. They are the person that's doing the digging, doing the research, and making sure that you're protected, but not just protected, but going above and beyond. And that's something that, that's the name of our team, the Big Helper Realty Group. We pride ourselves on helping our clients and advocating for them. And that's, even in the case of a new build, how many times, Merrill, have we on our team been able to help our clients in a new build situation get a better deal and be better represented than if they had walked into that new build office by themselves?
Yeah, let's touch on that new build situation, because the builders reps, when you walk into a builder, yes, they are absolutely super friendly and nice, and but they are not on your side. And those new build contracts heavily favor the seller, the builder, and they can almost do anything they want in those contracts. And it's important that you understand, what it is that you're agreeing to. And they're just sort of like, hey, click, 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 sign through this contract. All right, congratulations, you're buying a new home. But there's some consequences to all of that we would really want you to understand. One other
we do have a question that just came up here, Merrill.
Yeah, I saw that.
Okay.
So I'll get to that in a second. But one other thing is, when you hire a real estate agent as a buyer, there's usually no cost to you. With our team, right? If you work with one of us, there's never a cost to you as the buyer. We accept whatever it is that the seller is willing to pay as a commission. So it does not cost you anything, including on new builds. I get that question a lot of times. People, well, am I allowed to still use you and buy a new build? Yes, absolutely. So there's no cost to you. So there's really no reason to not get us in your corner and advocate for you. Now let's go ahead and move on to this question. Somebody asked if we recommend rent to own. Renting is so expensive that saving up money for a down payment seems impossible. And we're going to get to this here we're actually going to cover some of this in a minute, but actually I do not recommend rent to own. First of all, there are very, very, very few rent to own options. We call those lease purchases. That's where you say, hey, I'm leasing this home for X period of time, and then I'm going to buy it at this future preset date at this predetermined price.
And most of the time, a lease purchase, this is a common misconception, is that, well, I need to save a down payment to be able to buy a home. Even on a lease purchase, there is a down payment.
Yeah, in order to do a lease purchase, the seller is usually going to require some sort of significant deposit to agree to doing the purchase. There's a lot of risk for the seller, but usually the only time you've got a seller who's willing to do a lease purchase is when they can't sell their home to a traditional buyer. So there's usually something, it's overpriced, or the home doesn't show very well. It's not often that you get a hot property, the beautiful remodel that everyone wants, and the seller says, sure, I'll do a lease purchase. Most of the time those are, selling to traditional buyers quickly. There's a lot of extra risk involved with lease purchases for both parties. And because of that, usually the terms for the buyer are not that favorable. When you do lease purchases, I feel like a lot of the time it is a seller taking advantage of a buyer. Rarely is it a mutually beneficial agreement. So,
well, let's
that though. We really think that the best first step, if you're thinking about buying a home, is to sit down with a lender, have a home loan consultation, and get pre-approved for the home loan that you want to get. Now, with that pre-approval, a lot of time, I just want you to sort of understand a little bit of the basics of what it takes to get pre-approved. A lot of buyers think that, their credit score might be the only thing that matters, or their income might be the only thing that matters. But a lender actually looks at, we call them the 4 C's, your capacity to be able to make the payments, your capital, down payment and cash reserves, what kind of collateral are you using for the loan, and what is your credit history. A couple of big misconceptions that a lot of people have about getting pre-approved is they think they have to have the most incredible credit. Oh, if I don't have at least a 720 or a 780 or whatever, then I don't think I'm going to be able to qualify for a home loan. And that's not true. We have been able to help buyers with a credit score as low as a 580. And so, right now, banks are holding back a little bit with Corona, but I think eventually we'll get back to that 580. But right now we can pretty comfortably, in a lot of cases, go down to a 620. So there's lots of loan programs where you do not have to have this perfect bulletproof credit. And, I know a lot of people will have collections, medical collections, old stuff like that. And a lot of the time you don't have to get all that paid off and get your credit history perfect before you can buy a home. Now, don't get, obviously the better the credit you have, the better it's going to be for you in terms of getting a great rate and things like that. But it is still beneficial to buy a home, even if, maybe you can't get a rate in the low threes. Maybe you're going to be in the mid threes or high threes. That's still like an insanely amazing rate historically. And you're still probably going to be saving money over what you might be paying in rent.
I think the big piece of this, though, is, a lot of times when I'm talking to a first-time home buyer, they're afraid to have someone look at their credit,
Right.
So they'll say, hey, go ahead.
Yeah, you sort of feel like the person's going to be judging you.
Yeah, and so it's a scary step, right? And I think that's important to know when you're working with a skilled agent like ourselves and someone who understands the process. The reason that we get that home loan consultation is so that we know, what is the monthly payment that you're comfortable with. A lot of times people say, well, how much can I get pre-approved for? A more important question is, what's a monthly payment you're comfortable with? And then let's make sure that we qualify for that. And that way we can really start to craft your home search. But a lot of times, the process itself, we're going to talk about timing here in a couple slides, but the process itself does take some time. And what we don't like to see is for someone to say, okay, I'm ready to move. In fact, I need to move in the next 45 days. And they haven't started the process. And a loan officer, a lender, they're really going to help you make some minor tweaks that, one, could boost your credit score, which could, put you into a better interest rate, but also help you understand what you're doing to prepare to buy that home financially to put you in the best scenario possible. And so it's always great. Merrill, in your recommendation, how many months prior to purchasing a home would you speak with a lender?
If you feel that you're going to need to fix things on your credit, let's say, then there really is no too early. I mean, a year in advance, right? But if you're pretty confident that your credit's pretty good and you might want to tweak a few things, 3 to 4 months before you're ready to start making offers on a home probably is when you should be talking to a lender and working on getting pre-approved.
Okay. And we did have another question come in from Erica. She says, what is a good rule of thumb to find the price range you can afford?
Yeah, I'm really happy you asked that because we might have skipped over that. So a lender determines how much you can qualify for, like how much of a payment you can qualify for by using your debt to income ratio, which is where they look at, okay, how much are all of your debt?
That capacity, right?
Yeah. How much are all of your debt payments compared to how much money do you make each month? And how much money you make is, we use your gross income before taxes. If you are self-employed or an independent contractor, that's a totally different process. And I don't want to go into the weeds on that today. It's a lot more complicated. But if you are a W-2 employee and you make it kind of a fairly set amount, we can usually, all of your debt payments have to be less than about 45% of what your gross monthly income is. So just to make the math easy, if your household, you and your spouse, or maybe you're buying a home by yourself. Okay, let's say you're buying a home by yourself and your gross monthly income is $10,000 a month. First of all, congratulations on that fantastic salary. Then your total debts need to be less than $4,500 a month. So when we're looking at your total debts, we're looking at what your new proposed house payment is going to be, including taxes, insurance, and HOA. And then we're also looking at the minimum monthly payments that you need to make on things like student loans, car payments, credit card payments, things like that. So again, $10,000 a month, all your debt payments, including the new proposed house payment, are $4,500. So let's say that your current debts are $2,500 a month before you buy a house. Okay, well then we know that your new house payment, with everything included, taxes and insurance and HOA, needs to be less than $2,000 a month.
Perfect. That's really helpful. So another thing, Merrill, when we're talking with a lot of buyers, there's always a couple things that they think are holding them back. So let's talk about two of the biggest myths that people, or misconceptions that people think that they need to have in place in order to buy a home.
Well, I already touched a little bit on the credit score, but let's talk about the down payment. So you can actually, you do not need a 20% down payment. We help buyers all the time get into a home for no money down. And there's multiple scenarios where that can happen. First of all, you got VA loans. If you're a veteran, you qualify for a VA loan, you can buy a home for no money down. You have USDA loans. Those are rural areas. Really the only place in the Phoenix metro area that we see people using those loans. Well, at least in the areas that we work, is in Florence.
Actually, yeah, I just helped a woman relocate from California on a fixed income, so Social Security income on a fixed income. We got her into a new construction home with no money down using a USDA loan, and she was actually got into the property, so no money to get into the property, and her monthly payment was less than what her rent was. I mean, it was a fantastic, and she got a brand new home in Magma Ranch.
Yeah. Now, if you don't want to go to Florence, okay, there's also some down payment assistance programs. The big name ones here in Maricopa County is called the Home in 5 program. It's put out by the Arizona Department of Housing. And then for the rest of Arizona is a program called Home Plus. And you use those programs to get a grant to cover your down payment. So usually if you're not a veteran or not USDA, the minimum down payment you're looking at is somewhere between 3 and 3.5%. And so we can couple that with one of these grant programs to get that part of your down payment covered. Now they do come with I like to be transparent and upfront with the people. When you use one of those loans, you are paying a little bit of a higher interest rate. It's probably about 1% higher than an average interest rate. So if you could normally get a 3.5% rate, you'd probably be looking at 4.5% for this type of loan. But you're getting into the house for no money down, and so it's a great scenario. And I tell people all the time, listen, yes, if you could make your own 20% down payment, that is more ideal than putting a lower down payment. But it's better off to get into a home now than it is to wait, because home values are on the rise. So let's take 2019 as an example. Average home prices rose by 10%. So let's just assume you bought the average home at the beginning of 2019. Well, by the beginning of 2020, that house was worth, a $300,000 house is now worth $330,000. So by waiting a year, you missed out on building your net worth by $30,000. So get into the home, even if you have to use a down payment assistance or a 3% down or anything like that, because the longer you wait, the more money you're leaving on the table in terms of, increased home values.
And we're seeing a lot of people refinance right now. That's not something for everybody out there that does own a home right now. And if you haven't looked into refinancing, that's a huge benefit right now, just because of the low interest rates. But that's another way, if you don't have that 20% down, with, as Merrill mentioned, the value increasing, you do have that option to refinance later into, drop that mortgage insurance and get into a different payment.
Right. Now,
go ahead.
Yeah, once you've gotten pre-approved, right, and you go out and you start looking at homes and you find a house that you like and you think you might be ready to make an offer, what do you need to know? Well, the first thing is, I want you to understand that the list price of the home, that is just a number that the listing seller decided to put. And it might be low and it might be high. We've seen a lot of cases where the price is low. The seller has intentionally put the home out at a really aggressive price because they want multiple offers. And then other times it might be it might be high and it's way overpriced. So we help you determine what the house is really worth based on what we call comps. What else has sold near this house that is similar recently? Okay, so we try to find 4 or 5 other homes that are pretty similar, get a feel for what those homes are selling for to help you determine what we think is a fair price for the home. And then we make that offer, we negotiate the offer on your behalf, figure out the terms, when are we gonna close, well, how much is the down payment, are we trying to get the seller to pay for a home warranty? Usually we are. An important thing to understand, I mean, it depends on what you're looking for and what areas, but for the most part, we have an extreme shortage of inventory. What that means is there are very few homes available for sale compared to the overall size and population of Phoenix. And so most of the time, most homes are selling pretty quickly. And a lot of the time, especially if you're looking for, a lot of the buyers that we work with, they want the home that is,
ready. Move-in ready.
It's beautiful. It's pristine. It's totally move-in ready. Just bring your toothbrush and it's ready to go. And oftentimes those homes are the most competitive. They oftentimes get multiple offers. So you definitely need to act fast. You really cannot afford to think about it overnight because by then it might be gone.
Well, so before we move into the next slide and the whole think about it, I think the one thing that's important is, when you work with a professional like us, some people say, well, I can just find the home online. Why do I need an agent? I can just find the home online. And there's so much more that goes into just finding the home. One of the things that we do is we actually look for off-market properties. And that's huge, so we call it doing the digging. Of course, we're going to see everything that's online, just like, most consumers do. But then we're also using our network of other agents, and we're looking at off-market properties to try to see if there's something that we can get an advantage on, get you in there, get an offer in before all the competition really comes up. But let's talk about, once we do find that home, Merrill, and we've come to terms with the seller, we're under contract, what happens next?
Can I touch on one more thing about looking online that I think is really important? So before we move on to the next step, so when you're looking around on most websites, they are displaying properties that are already under contract. And that is just really heartbreaking when you see a house that you think it's available. And as far as you see online, it looks like it's totally available. But the reality is that they have already accepted an offer. Our MLS has this unique status called under contract, but we're still accepting backup offers. All that really means is, as a seller, I would love some leverage of some backup offers so that when this buyer comes and asks me to fix something, I'm going to say, hey, buddy, I got 5 backup offers already, so hit the road. But the reality is that most of the time, those homes that are already under contract do get to closing, and they're not going to fall through. And we see buyers all the time. They find a house on Zillow or Realtor.com and it looks amazing, and they call us and they're so excited to go see it, and it's already under contract. And of course, we try to get them in there if we can, but most of the time, I had one literally just last night. She just loved this house, and it was already under contract. I reached out to the listing agent, and it's scheduled to close later this week. They're past all the inspections, they're past appraisal, they're past all the contingencies, and they're just kind of waiting at this point for the loan to fund. And so it's very unlikely that deal is going to fall through. So be careful when you're looking around online, because a lot of what you're looking at might not be available. If you were to want to use a website that doesn't display those properties that are already under contract, we would recommend our site, which we've got the banner displayed for on the bottom, bighelperhomesearch.com. We remove all the homes that are in that unique under contract but accepting backup offer status.
Yeah, well, I mean, because that just hits on how important it is to know, to have a good source of information, partnering with a professional that has the access to the information that you need. And that it is sad when we do find homes that, on Zillow say that they're available, but they're not, just because, slow to syndicate and misinformation.
Right. So once you've made an offer, we've determined the fair price for it, you submit that offer and the seller has accepted it, or maybe they countered and you accepted their counter, you now officially have that home under contract, which means that you have the sole right to be able to buy that home according to the terms that were set forth. The first thing that you need to do within 1 day of contract, 1 business day of contract acceptance, is we need to get your earnest money deposited. If you don't know what earnest money is, that is our good faith deposit saying, hey, we're going to fulfill our end of the deal. The amount of the earnest money is totally negotiable between the buyer and the seller. You know, a lot of the times we encourage clients, the more earnest money you do, the stronger it's going to make your offer look. We encourage people to have an earnest money in the ballpark of about 1% of the purchase price. But I want to be clear on this because people really misunderstand this. The earnest money is not given to the seller. It's deposited with the title company, which is a neutral third party. So if there is a dispute, the title company determines which party is going to get the earnest money as damages. But also, the earnest money is credited back to you when you close. So it's not money that you're just giving up and you're never going to see again. When you go to close on the property, the earnest money is credited back to you, and it's either applied towards your down payment if you're making a down payment, or you're literally given a check back. Down payment
or closing costs.
Yeah, down payment or closing costs, which we'll touch on here a little bit more here in a minute. Or if your down payment and closing costs are all covered, it is given back to you at closing. And so you do need that earnest money deposit with the title company. The contract,
that's something that your agent helps you with too. So just know that all of these steps right here that are listed, this is exactly why you hire an agent. They're going to do these things for you.
Right. Yeah. So we will make arrangements to help you get the earnest money in. We'll pick it up, or we'll send a courier service to come get it from you, or we can even arrange for it to be shipped overnight to the title company, wire transfers. I mean, we bend over backwards to try to make it as easy and convenient for you as possible. The contract on a resale. Now, not on new builds. As I mentioned, the new build contract heavily protects the builder, but on resales, the contract, frankly, in my opinion, heavily favors the buyer. It's packed full of contingencies that allow you to cancel the contract and get your earnest money back. Now, of course, there's some conditions to all of those contingencies, but the first one and the biggest one is your 10-day inspection period. So once you get an offer accepted on a home, you get a 10-day period to conduct any inspections of the house and of the area and of the community and of the schools and of the hospitals and of anything that is important to you. You get to investigate during that 10-day period. And if you decide there's anything that you can't live with during that 10-day period, and it does not have to be related specifically to the condition of the house, it can be related to the neighborhood or to anything like that, then you can cancel the contract and you get your earnest money returned if you do it during that 10-day inspection period. But like most buyers, right? You didn't put the offer in on the house until you were pretty confident that you already liked the area, right? So you oftentimes will hire a licensed home inspector to do the inspection of the house, and all houses, including brand new houses, have issues, like little things on them that aren't working properly, doors that don't latch properly, sinks that drip that shouldn't drip, and missing anti-siphon devices on the hose bibs, and lots of things that sound really scary when you're looking through the inspection report. A lot of them are very minor and just kind of parts of owning a home, but there's going to be certain things that you're probably going to want the seller to address. So when that happens, when you're done completing your inspection, we put together a document that says, hey, seller, we're requesting that you fix these 5 items, right? And we send that into the seller. The seller gets up to 5 days to review that and decide, yes, I'm willing to do all those repairs, or you know what, I'm going to do 4 out of those 5 repairs, or no, I'm not going to do those repairs. Yeah. The seller is not obligated. They don't have to do any of the repairs. There's no repairs that they absolutely must do unless they were pre-negotiated at the time that the offer was made. But most of the time the seller wants to sell and you want to buy. So usually we can find a way to, the seller says, okay, I know you want those repairs done, so I'll go ahead and agree to do them. Or, hey, I'll give you this credit instead of those repairs. And a lot of the times, most of the time, we're able to work something out. But if the seller comes back with a response that you're not willing to live with, you asked for 5 things and the seller said, nope, I don't care, I'm not doing any of it. They want to be stubborn, then you're allowed to cancel the contract and you get your earnest money back. Yeah. After the inspections, we order the appraisal. If you're financing, right, we order the appraisal through your lender. And the appraisal is where the bank is going to send somebody out to the home, a licensed certified appraiser, to do their own analysis of what the home is worth. Basically, they're looking at the same comps that we used when we decided what to offer on the home. really the appraisal, it protects the buyer and it protects the lender. The lender wants to make sure that they're not lending more money on this house than it's potentially worth. What they really are asking themselves is, hey, if we someday had to foreclose on this house, could we still turn around and sell it for what we're lending on it, or has this price been inflated? And so the appraiser goes out, looks at the comps, and checks to make sure that it is worth what we've agreed to pay for it. And if the appraiser says, yep, it's definitely worth what we've agreed to pay for it, then we move on to the next step. If the appraiser says, I think this is a little high, I think it's only worth, I think it's worth $5,000 less than what they've agreed to pay for it, then the buyer is given an additional 5-day period to potentially cancel the contract, or hopefully most of the time what we're able to do is go to the seller and negotiate for the seller to lower the price to the appraised value.
Yep. So there's a lot of things in there. I think we touched a little bit on closing costs, but one thing to point out is these are upfront costs. So that earnest money, as Merrill said, it's deposited within 1 business day. We're going to schedule a home inspection. Home inspections, the cost of a home inspection varies depending on the size of the home, but somewhere between $350 to $400, $500. And that also includes pools and termites.
Roof.
Roof. They're going to test all of the major systems of the home, and then the home appraisal is around $600. So those are some of the things that the earnest money is a check that is deposited, but the home inspection and the appraisal can be put on a credit card, or you can pay with cash or debit card.
Yeah. So that's a good point. Those are expenses that the buyer pays for up front. After we get past the inspections and the appraisal, we kind of wait for the loan to finish up. We make sure that the first thing you're going to get from your lender in most cases is what's called a conditional approval. The lender is going to come back and say, okay, your loan is approved, but we've got some conditions to meet before we're going to send the cash, right?
Yeah.
And those are, usually just, simple things like, hey, I want an updated bank statement. I want an updated paycheck stub. I want an updated, I want a letter of explanation about why your credit was pulled 3 months ago. Hey, there's this random deposit in your check account. We don't understand what that came from. Where did that money come from? I mean, don't give me the underwriters will dot their I's and cross their T's, and you're not going to be able to pull a fast one on them. So everything will be documented, and they'll just want usually some explanations and clarifications about a few things. Once you get those submitted, then it goes back to the underwriter. They review, then they give the final approval, and that's when we usually schedule the final walkthrough on the house, go out to the house and make sure that the seller has completed all the repairs that they've agreed to, and we schedule the time for you to sign all of your documents. Oftentimes you would go into the title company, but now, with everything that's going on right now, a lot of times they're sending a mobile notary or even figuring out how to use an online notary for you to sign all of the closing paperwork and work on moving one step closer to closing on the home.
And typically this is done a couple days before close of escrow. I think that's really important for people to know when we are setting up closing, is that you're going to sign your documents most of the time before the day of closing, and that means that you don't get your keys when you sign. But what can they expect on the actual closing day, or the day that they get their keys and get to move in?
Yeah. See, a lot of people think that when they sign, that's synonymous with closing. And unfortunately, it is not. After you sign, the paperwork that you sign goes to the lender. The lender makes sure that every signature is there. And then they say, okay, we're good with this. We're going to go ahead and send the money. And oftentimes that doesn't happen until the next day, because banks have funding wire cutoff times and all of that. So usually you are signing a day or two in advance. Then the lender sends the money. Once the title company has received all the money, both from you and from the lender, then they notify the county recorder's office saying, hey, we've got everything signed. We've got all the money. We're ready for you to record this as an official sale. Once the county recorder notifies us, yep, the sale is recorded, it's official, that is when it is closed and when you're allowed to actually get the keys. And we figure out a time to meet you, give you the keys, and it's this awesome big celebration. You just bought a house. Congratulations.
Yeah. So it's important to, and one thing I'll stress, here in Arizona, we don't have a time frame on this. So the lender usually funds, as Merrill said, in the morning on closing day. The lender will fund in the morning, And once the title company sends it to, the county to record, that recordation could take 5 minutes and it could take 4 hours. So, let's say that you are closing on your home tomorrow, April 30th. We always suggest that you don't plan to move in on the day that you're closing, just because we can't give us a time frame. And it's hot here, even right now, it's already, hitting 100 degrees. Your movers, if they're sitting outside the front door, they're not going to be happy, because you won't be able to get into that home until it records, and we can give you the keys and you do have possession of the home.
Right.
So I don't know if there's any other questions, but Merrill, was there something else you wanted to hit on?
Yeah, there's one more thing I want to hit on. I guess maybe I glazed over it, but we didn't really talk about closing costs very much. We said we were going to talk about it later, and we didn't. So I just want to touch on that really quickly. So when you buy a house, you've got your down payment, right? And maybe you're using a down payment assistance program so that your down payment is going to be covered by that grant, or maybe you're using a 100% financing. So it's possible you don't have a down payment. But then there's also closing costs. And the closing costs are the fees that are being charged in connection with purchasing the property. Those fees include fees that the lender is charging. Yes. They include fees that the title company is charging. And they also include prorations. You have to, pay a prorated amount of interest and HOA fees based on when you buy the house. The HOA oftentimes charges fees related to the transfer of the property. And when I tell people this, they're like, "You've got to be kidding me, right?" But yeah, most of the time the HOAs charge anywhere between $400 and $1,000. Some communities are even more than that, but most communities are around $400 to $600 in fees that the buyer has to pay. Well, it's negotiable whether the buyer or the seller pays it. But there's some fees the HOA charges. But then the big one is you have to pad your escrow account. So when you buy a house, right, the lender is going to make sure that your taxes and insurance always get paid. You don't pay those bills. You just pay your monthly mortgage payment to the lender, and then the lender pays your taxes and insurance for you. Well, they have to get 1 year worth of your homeowner's insurance policy up front, plus an additional 3 months to pad your escrow account, and an additional 3 months worth of property taxes to pad your escrow account. So that's a huge chunk of the closing costs. So on your typical, $300,000 purchase, you can expect somewhere between, and there's also a possibility you're paying discount points on your loan. Let's say you wanted to buy your rate down. So the amount of closing costs can vary pretty dramatically. But if you don't have, sorry, I just totally lost my train of thought. They can vary pretty dramatically, but assuming you're not paying any discount points and it's fairly typical closing costs, you're probably going to expect somewhere between $6,000 and $7,000 on a $300,000 purchase. Now, we can also, so if you're like a lot of buyers we work with, you might be thinking, but I don't have $6,000 to $7,000, right? Yep. Well, we can ask the seller to pay the closing costs. So we can go into a seller and say, "Hey, we would like, we're going to make you this offer, but we want you to credit the buyer $6,000 towards their closing costs with this offer." Now, the thing to be aware of is a seller is going to say, okay, well, that's just lowering the amount of, they don't have to pay it up front. It's going to come out of the equity in their house, but it is going to lower the amount of the check that they get at the end of all this. And it's going to be $6,000 less than what they thought they might, what they would have otherwise gotten. So you do have to be a little bit more aggressive when you're making an offer on a house. You can't be quite as conservative with your offer. And we need to keep the comps in mind, but you can't go on the low end of those comps when you're also asking for $6,000 in concessions from the seller. The point is, we can get your closing costs covered by a credit from the seller. We can get your down payment covered. We can get you into a home for very little money out of pocket, probably less than you would have to pay to move into a house and rent it. Between security deposit and first and last month's rent, you can probably buy a house for a little bit of money, a little less money out of pocket than that.
Yeah, we got another question that just came in. I think the key there, Merrill, is that's why you meet with an agent like ourselves, so that we can look at the whole picture and strategize if we are going to ask for closing costs for the seller. And that's a fantastic strategy for people who have their down payment, but they don't have that the extra money that they need to cover those closing costs. We do that all the time. There's absolutely ways to get the seller to pay the closing costs, but you have to be strategic. And every house and seller are going to have a different scenario. But as long as you've got a good partner, then you'll be able to get it done.
Yeah.
So let's go ahead and answer this question. Mark Roberts says, do you have advice for using real estate to build long-term wealth? Is it better to pay off my mortgage early or refinance and buy a rental? It's a great question.
Yeah, really great question. Now, honestly, I feel like we probably ought to do a whole nother webinar just on investing in real estate. But frankly, yes, we absolutely recommend investing in real estate for building wealth. I showed you that slide earlier that showed you the net worth of an average homeowner versus a non-homeowner at the age of 65. Real estate is a very, very secure investment. It pretty much always goes up over time, and we've got some really great data to show that it goes up. You can get better returns on it than you might get on a stock investing and different things like that, because you get to use other people's money to do it, and you can get tenants.
Money is cheap right now.
Yeah, and with how cheap money is right now, I personally, I'm doing this myself. I do not advocate paying off your house. I think you're better off to leverage and try to buy a few more properties, as long as you have positive cash flow on those properties. Then I think it's a good idea. And let's not forget, there's some tax benefits to having a mortgage on a house as well. So I think when you compile all of those things together, I'm not trying to give financial or tax advice here, but for me personally, it doesn't make sense to pay off your house, at least not at this age and this stage of our lives. I think it's better off to diversify and buy more real estate. But we'll have to do a whole nother episode on that.
That sounds like a great plan. So for anybody that's got more questions that we didn't cover today, these are our handles. This is the best way to get a hold of us. The moral of the story, bottom line, is it's never too early to talk to a professional and have a strategic partner going into this. Believe it or not, even right now, and this is not something that Merrill and I touched on, but even right now, with everything that's going on, people are still buying and selling real estate. There's an absolute need for it. There are people that need to buy and get in and get out of their rentals. And so there's a lot of misconception going on. So I'm going to encourage you guys, every Monday, Merrill records his Merrill's Monday Market Madness, and he goes over the stats of what's really going on. If you're listening to national media news about real estate, it's very different here in Arizona. Our market is not like what's going on nationally. Would you agree, Merrill?
Absolutely. Yeah. Matter of fact, we've already seen a turn in the market, and it's already starting to improve. So I think that it's going to continue to improve, and it's getting more and more competitive as each day goes on.
Yeah. So the important thing is to make sure you get with a strategic partner and, start figuring out what's your next step and what's the best option for you. And does it make sense to purchase now? That's something that people ask us all the time. Should I buy a home now or should I wait? And, we'll always say that really depends. What are you looking to do? Buy, sell, or invest, right? It depends on what your long-term goal is. But that's exactly why you should reach out to Merrill, myself, or someone on our team, so we can set up a strategy session and really figure out what's the next best step for you.
Yep. Thanks, everybody.
Okay, perfect. Yeah, thank you, guys.